Alright, this will be a daily outlook going inside of Monday, July 13th. There's obviously a new weekly power of 3 also. So we'll take a look at the idea of a monthly profile, of the potential weekly profile also. We'll look at the 4-hour chart. We'll start on the daily chart here, simply analyzing a bit what is happening inside of this range, where we come from, why has the previous week here delivered this way. Well, obviously we know first of all that from a higher time frame perspective, we are trading a classic buy year in terms of a yearly profile. And analyzing the range of the 3-month look back, we see that price comes from 2 monthly classic buys, right, and the previous monthly range being swing to Z. Okay, so this tells us that in terms of the phase of price delivery from a higher time frame perspective, the market comes from an expansion to a consolidation. Okay, so the anticipation that we should have based on how this has been delivering is to see price continue higher, right? Expansion, consolidation. Price will not find a reversal, right, when it has consolidated and is preceded by expansion, unless, right, it either trades to the highs and fails or were to create a divergence. Okay, so that's that for a high time frame perspective. We analyze, we come from expansion to consolidation, and so because of that, every move lower, right, is suspicious, right? We have to see these moves lower here as a shakeout. Now, if we analyze based on where we are currently inside of this chop, right? Well, analyzing the previous monthly range, I can see that at 50% of the previous monthly range, so June, there is the range of a suspension block. You can see that in discount of the previous monthly range, we find a bullish order block. And we see that in premium of the previous month, we find a bearish order block. Okay, so price has been currently trading right around all of these PD rays since the beginning of the month. Obviously the market had opened the month inside the range of the premium order block, right? Had opened right at 50% of this range and eventually traded lower. And traded lower where? Traded lower inside the range of the discount order block. You can see market trades to 50%, has a shakeout right below. This was the low of the last week of June, right? The last full week of June. The market takes out this low, and then Thursday here delivered as a classic buy, right? And Friday offering overall a continuation of this move. Now we're gonna have a new week here opening around the range of 50%, right? 50% of this consolidation, where, as we saw, resides a suspension block, and what you can see is that price has now reclaimed 50% of this PD ray after having traded inside the discount array and from a monthly open, right, that did not create a shakeout above its open, right? So far the monthly open has been open lower. Okay, so because of all these reasons, I really do favor for Monday, right, or overall for the weekly profile to be an open low high close profile with a low hanging fruit drawn liquidity to be the current monthly high that we have. And if then the market were to deliver towards this range, it's going to be important to see how the market starts trading at the upper quadrant here of the premium order block, where you can see that there's a large rejection block inside of the range. And the only reason why I'm saying to pay attention as to how it would trade here is because the S&P 500 is currently much stronger than Nasdaq, right? The S&P 500 has already traded above this high, has already traded above this high, right? And so, just something to pay attention of in case, say, of something like a midweek reversal here in case of a divergence, right? And price would want to come back in the range. But if not, aside from that, right, aside from this potential concern for, well, not a concern, but right, we're just looking at the possibilities here of how an open low high close or open high low close profile could form based on what's available inside of the range. Okay, so we'll look more at what's located inside of this range on the lower time frames, but again, so far from the daily, we saw that the open of the month doesn't have a premium wick, right? It's simply open, traded lower, and we saw that the first full weekly profile here of the month of July was a Wednesday low of week profile, again after having traded to the discount order block and respecting this range, right? This also came with a divergence here at what was here the 2-week or the 3-week look back. I believe it was the 3-week look back for the previous weekly range, right? And now the market has reclaimed the suspension block located at 50% of the previous monthly range. So I think that there's a lot of narrative to assume that the drawn liquidity is in premium. Right? We're looking at a low-hanging fruit drawn liquidity. You know, this is not much of a, it's only about a 2,000 ticked range. Right? If the market will be bullish on Monday, it might trade to it already on Monday, right? Since lately these daily ranges have been give or take around 2,000 ticks. But it can be, say, that the market first trades lower, okay, on Monday, or consolidates around this range, right? And so that can then give an opportunity for Tuesday to trade higher. Okay, so low-hanging fruit. If not, we'd be looking at an objective a bit higher inside of the range, and right, I'm just going to be interested in seeing if price were to trade higher, at what time of the week is it trading around these levels, and what's the reaction, okay? Because say if it's a Wednesday and price is trading inside the upper half here of this bearish order block, more specifically inside the rejection block here, and say we're to find a rejection through a bearish daily profile accompanied by a divergence, then this can give strong narrative, you know, to send price back inside of the range, okay? And that would be 50% of the previous monthly range, so we'd be looking at the suspension block. Okay, but until that happens, again, I do prefer a long bias. Okay, we can look at a 3-week look back. We can analyze here the phases of price delivery inside of this range. So we had on the 3-week look back here a swing to Z profile, right? So the market opening, trading higher, creating the swing, expanding on Tuesday, right? And then you can see that as of Wednesday, so midweek, the market starts to consolidate, building a range. On the 2-week look back perspective, I would overall still consider this a consolidation profile here. You know, what can you label this? I'm not really sure how to label this, I'll be honest with you. But, you know, overall, what did the market do, right? There was a range established on the first week here, right? On the 3-week look back. This was the consolidation of the swing to Z. Market trades first below it here inside the range of the rejection block, eventually trades higher, right? And every time it trades higher or lower, ends up failing. Okay, so you know, I would consider this still a consolidation profile. Overall, the range ends up closing near 50%, right, of that weekly range. Okay, so we have an expansion to consolidation, right, to continued consolidation, followed by here a Wednesday low of week profile. Okay, so clearly an open low high close profile, representing, in my opinion, a phase of price delivery being a reversal, right? Expansion, consolidation, expansion, reversal. Like as you can see here at the beginning of last week, Monday had traded above the open, right, inside of what we had analyzed here being a bearish order block, and traded lower, right? And so coming inside the open of Wednesday, right, this looked like a classic sell day. But then because of the way that Wednesday closed, we analyzed that the classic sell weekly profile was most likely off the table, and that we'd be looking at a Wednesday low of week daily profile, weekly profile, sorry. Okay, so expansion, consolidation, expansion, reversal, right? So the new week here is going to be opening on the right side, okay, of at least what I consider to be here a market maker buy model. So the smart money reversal, you know, now we have to determine if this here was a low risk buy or if it was the first stage of accumulation. You know, maybe we can help ourselves by putting some standard deviations. I'll be using the order block here of the range, and you know, we can probably consider this to be the low risk buy of this market maker buy model, and anticipating some kind of reaccumulation if we believe that our drawn liquidity is in premium around the range of 30,200 to 30,500, say, give or take. Okay. All right, now we can look at what's located inside of this range here and what will help us to determine where the weekly low or high could be forming. We'll look here at the range of the 3-week look back. Again, we have the high here, which is obviously near all-time highs, and overall is right, those highs are relatively equal. At the lows here, we saw right the previous weekly low. This is where the previous weekly low formed, and we saw that this came from the respect of the bullish, the daily discount order block. Okay, so at the highs here, you know, from 75 to the highs, we have the range of a bearish order block, right? That, and you can see that on the 2-week look back high has formed around this range. But since the range is a bit large here, and price so far has proved that only the large rejection block, right, has proved to find rejection, this level happens to cut right in between 75% of the range. So this is a level of interest. Okay, this is the open of the daily profile from Monday, June 22nd. Okay, so essentially it is this daily candle. So I'm gonna, right, this is an important premium level to have marked out on your chart. At 50% of the range, obviously there's been a lot of action, right? But since the previous week here, well, because of where we're going to be opening, okay, so around 50% here of the 3-week look back, and because we come from, right, we're going to be opening on the right side of a bullish curve. I'm going to want to use the latest PDRA created inside of this range, right? I don't want to, since there's too much action going on here, and because the previous week was, or at least the last 2 to 3 days of the week here created an expansion higher. And obviously I'm interested from a higher time frame perspective of seeing this continuation, right, this expansion continue towards all-time highs. And I'm going to want to use simply what was left behind by the previous weekly range, which in this case happens to be the range of a bullish order block. Okay, or you can even use the rejection block here from Friday, which is an intermediate term low. And then at 25% to the low of the range, right, so that would be the previous weekly low. This is where we find the range of a bullish order block. Okay, so we have our premium level, we have our level at 50% of the range, and we have our level in discount, right? So these are going to be levels these are levels that are important to have marked out all throughout the week. Very likely the low or the high of week will be forming around one of these. And if it doesn't, I mean, it's still useful to pay attention to these levels when you come inside of a trading session, okay? Because these are levels that don't move for me for the rest of the week, right? So very important for my pre-market analysis to look at where we are relative to those levels and what's the current daily profile anticipated based on, right, on the quadrant that we're trading inside of. All right, and now we can look at what's of interest for today's daily profile, okay, so being Monday, first day of the week. Now, Monday here will be the day before CPI, okay, and on the economic calendar this week we have data every day aside from today, right? And now data, I mean, you know, red folder data, so data that matters for us, right, at least in terms of a trading style, to be able to identify daily and session power of threes. Today there's nothing. There's going to be CPI, core CPI on Tuesday, core PPI on Wednesday. There's going to be retail sales, core retail sales, and initial jobless claims at 8:30 on Thursday, and then there's going to be the University of Michigan inflation expectations at 10 a.m. on Friday, right? So we know that because of the time at which these data points happen, they tend to be important factors for sessions, right, or 4-hour or even potentially daily profile ranges. Okay, so let's analyze what was left behind here. First of all, we can look at what the daily profile of Friday was, and this was a New York reversal profile, right? And you can see that this range here, this is a characteristic of reversal profiles. These profiles tend to create intermediate term lows or intermediate term highs. Okay, in this case, you can see that the market comes from an intermediate term low here. Right, such was the case, say, for this daily profile, right? It's not really a, well, it could be still considered a reversal profile, but what I'm saying is from the perspective, say, of a weekly profile, right? Looking at the range of a Wednesday reversal, right? Wednesday low of week. This is a reversal, and you can see that the market does create here an intermediate term low. Oops. All right, so again, since here the current lower time frame trend is in alignment with my higher time frame trend, I'm going to want to focus mostly on what's located inside of the previous daily range as the way things stand at the moment. I'm not anticipating for price to go and trade below the previous daily low, okay? On the S&P 500, the previous daily low here is a daily immediate rebalancement. Right, maybe we can look at that. Right, you can see that we have an immediate rebalancement at these levels. And as for Nasdaq, right, we have the range of a bullish suspension block, right, where we have a fair value gap right in the middle, and we have a volume imbalance in premium, a volume imbalance in discount. But you can see the large wick here that the market left behind, right? And this is represented by the intermediate term low being created in the New York session of Friday. So, you know, I really don't believe that the market needs to come back here, at least on Monday, right? You know, now say if this day here didn't have such of a large wick, right, then okay, I could have assumed that the market will retrace inside the fair value gap to then trade higher. But here I think there's good enough narrative to assume that this fair value gap should stay breakaway, okay, because of the fact that the low of this wick, which is the one that creates here the suspension block in the daily fair value gap, is an intermediate term low on the lower time frames. Okay, so let's start by looking at the previous daily range. We'll then look at the 3-day look back range. It's going to be on a 15-minute chart. All right. What you can see inside of this range here is that, right, as we saw, the market had a New York reversal daily profile, and this range closed very bullish here. Closed at the highs, closed as a consolidation preceded by an expansion. And so we can see what this market left inside of the range. You can see that the market left the range of a bullish fair value gap through the range of, right, an order block. This order block cuts from 25% to 50% of the previous daily range. Okay, so maybe if you don't want to use this fair value gap, you can simply use the range of that thick down close candle located in the range, and it honestly should be enough to help you gauge order flow, or anticipate where the daily high or daily low could form based on the daily profile presented on Monday. But overall, I like to view it like this, right? We have a level here in premium being a fair value gap through the range of an order block, and in discount we have the range of a large rejection block, right? In fact, this is where this thick down close candle being a bullish order block forms from revisiting the rejection block and expanding away from it. Okay, so I do believe that simply keeping these two levels should help you identify the daily profile and or objectives for the day. Okay, say in case the market does this, right? I'll put back these levels on my chart soon. Meanwhile, I just wanted to look at the 3-day look back range, simply analyzing the phase of price delivery, just to get an understanding of what is happening inside of the range and what does this likely mean, say, for the daily or for the weekly profile. Right, on the daily chart, so on the idea of a monthly profile here, or the idea of the weekly profile. So the market comes from the reversal of Wednesday, right, the intermediate term low here being created. This was preceded by a bearish profile, right? So expansion, consolidation, expansion to expansion, in this case being reversal. Thursday here ended up being a classic buy profile, and Friday ended up being a bullish New York reversal profile. Okay, so very, very bullish range here. Okay, and we can analyze what's inside of this range, right? So you see that large rejection block, okay, left by the range of, which is essentially the intermediate term low here, left by the previous daily low. Right, I talked about that you can be using this level also from the perspective of a daily profile if the low of day won't come from these levels. Okay. At 50% of the range, you can see here a clear bullish order block. Right, so I'll be using just the wick of it. And in discount, you can see that there's a range of a bullish order block with the range of a bullish fair value gap. There's also, right, well, this is a balanced price range essentially here, okay? So I'll be using personally the fair value gap here. Now this level, because I'm assuming that the weekly profile here is open, low, high, close, would only serve purpose to me, both the one at 50% and at 75% in case of an open, high, low, close sell profile, right? And I would use these levels as take profits, right, or partials from an intraday perspective, because from an open, low, high, close profile, to me the market doesn't need to trade back this low to create the low of week, let alone obviously the daily low for Monday. Right, and so these are levels that I'm keeping in mind here, right? But they're not levels that I'll keep on my chart, okay? Just because of where price will open. Now, it could be that price opens gaps lower, but these are things that are out of my control. In that case, if that happens, then I will put back these levels up just to see if price is interested to trade into them, and if it does, right, how does it react? But overall, again, since price will be opening here from the creation of an intermediate term low, from the creation of a daily suspension block, I do believe that simply using the range of here the rejection block, right, from the low, from the previous daily low, you can see that so far these levels have been sensitive to price action. Price came back to 50% of it and respected it. Price came back to the upper quadrant and respected it. Okay, so I do believe that if price needs to come back inside of this range, it will again respect it. But what I'm saying is it wouldn't surprise me if, right, because we see that price has been pretty bullish recently, and because we have no premium wick, right, no shakeout being created above the current monthly open, it can be that price uses, right, the range here of fair value gaps located at 25% of the previous daily range to create a low and to trade higher, right? So this would be in case of, say, a buy profile, or we'll use this level, okay, to consolidate around the range, right? Maybe trading in Asia here at these levels, opening higher, and then chopping inside of New York. Because you have to remember here, we still have here a pretty important order block inside of the range, right? This is the order block that created the previous weekly high. Now I don't have these levels on my chart because now this is a new week and my drawn liquidity has changed, and overall the context has changed. But I'm just keeping it in mind, right? It can be that once price starts trading around 50% or 75% of this order block, which still is here a lower time frame intermediate term high, that price could chop around this level, okay, creating some kind of daily profile like this. Okay, let's do a quick recap. So on the daily, we saw that price comes from a daily bullish order block located at 75% of the previous monthly range. We saw that the previous weekly profile here was a Wednesday low of week, right? So Wednesday reversal profile. We saw that price has created a daily bullish suspension block, has reclaimed the suspension block located at 50% of the previous monthly range. Okay, and so because of these reasons, I'm assuming that the low-hanging fruit drawn liquidity for the week will be the range of the monthly open, and past that, I'd be looking at 75% to the high here of the premium order block located at, sorry, here I think I said 75%, but I meant to say 25% here, so discount. Right, and here again, if this high is breached above, then I would like to see how price trades at 75% to the high here of the premium order block left from the previous monthly range. One more thing, again, we looked at the fact that ES is currently much stronger in the range. So, yes, I'm bullish, but I still do want to pay attention, especially on Tuesday or Wednesday when we have CPI and PPI, for the market to trade to one of these quadrants, create a open high low close daily profile, and this to be accompanied with a divergence, most likely to be located with all-time highs. Okay, ES taking all-time highs, and Nasdaq failing to do so. Here we looked at the faces of price delivery on a 3-week look-back perspective. We saw that price came from expansion to consolidation to expansion to reversal. Right, and we saw that now price will be opening around 50% of the 3-week look-back. So we analyze that in premium there's the range here of a order block. This aligns with this daily candle here. We saw that at 50% of the range the previous week here, right, creating a right side of the curve left behind a bullish order block, left behind a bullish rejection block, right? So an intermediate term low here. And we saw that in discount of the range, there's a range of a bullish order block. Now again, this level to me is more relevant in case of, right, a scenario like this. You know, it can be that price does this, but again, to me this looks like a pretty strong low here. Right, to me this looks like a clear shakeout, especially that it was related to an event. I'm not anticipating for Monday to trade back towards this range. Okay, but if it does, then I want to see how it trades in here. And on a 3-day look back perspective, we first analyzed the previous daily range and what it left behind. We saw that at 50% of the range, right, the range is pretty high resistance here. There's a lot of order blocks being created that had been created, you know, and so, you know, the question is, do you want to use this one? Do you want to use this one? Do you want to use, you know, the breaker here, right? There's a lot of PDRAs located inside of this range, right? This here is a breaker since price made a new low and then eventually trades higher from it. Okay, so overall I just went with the fair value gap located at 25% of the previous range. This fair value gap cuts through here the upper half of the bullish order block located at 50%. And then we saw that from 50% down to the low of the previous daily range, there's a large rejection block that has proof so far to be respected. Okay, so if price were to come back inside of this range, especially if it's in New York, right? If New York is trading around this range, I would definitely be interested in a New York reversal profile higher. Right, and overall we looked at also the phase of price delivery on the 3-day look back. We saw that price is very bullish, right? Keeps on expanding higher. Maybe we can put up some standard deviations also, actually, right, from these two down close candles. Right, and this could help you also align time and price, right? You can see that so far we've seen a stage of reaccumulation at 1 to 1.5, right? And so now, you know, well, the standard deviations here are mostly confluence for the idea of the direction of the weekly profile, right? Because we already have an idea that price should be trading higher. Right, and in fact you can see that 2 to 2.5 here aligns with the low-hanging fruit for the week or even for the daily profile of Monday, okay? Because it can be that the daily profile of Monday, since it comes from an intermediate term low, it could be an expansion profile. Right, aligns right with the opening price of the month here, right, being right here. And then past that, if the market were to continue trading higher, then we'd be looking at, right, all-time highs. Okay, so I think that this covers it all. We looked at the daily, we looked at the 4-hour, we looked at about everything that needs to be looked at. We have our key levels identified. We know where the drawn liquidity should be, okay, in premium, in discount. Okay, maybe we didn't talk about that. Well, we didn't talk about that because the market is bullish so far, right? But okay, say Monday here were to open trade lower, and you know the daily profile is anticipated to be, say, classic sell or New York reversal, I would keep it safe and just target the previous daily low. Okay, I wouldn't try and target past anything that already I believe that the market shouldn't even trade here. Okay, but if it will, right, or at least if it's looking like it will based on the daily profile, then I can use this as my drawn liquidity. right? Or at least you could use, say, it all depends obviously on how the daily profile is developing, right? If it is developing as a classic sell, then maybe you could be targeting the previous daily low. But say this is looking to be some kind of New York reversal, then in that case, you know, all depending on what time does the New York reversal happen, right? Does it happen early in the opening range, or does it happen, say, around the middle of the 10 a.m. 4-hour power of 3? You know, if it were to happen early on in the opening range, then yes, you could be targeting this, all depending on the context of the moment, obviously. If it were to happen, you know, past the opening range, then, you know, I would probably simply look to target here this volume imbalance, so that would be the high here of the suspension block, or 25%. All right, overall, the high here and 25% should align with these levels, right? The levels looked at from the previous daily range. Okay, so I hope that this was helpful, and good luck and good trading to you.